Yo guys, what's going on? Welcome back to another weekly forecast, and in this one I'm going to be doing gold and NQ. We'll just sort of add both of them together just because I feel like the weekly forecast will be a bit shorter today because I don't need to really do any like breakdown or anything. But to start off this sort of weekly forecast, let's just jump straight into the Forex Factory economic calendar. Let's have a look at what's going on. We've got Tuesday, we've got retail sales, so some high impact on Tuesday. Wednesday is going to be the main day. In the evening, so who knows, just keep an eye on that. Might go live this Wednesday for the FOMC as I usually do because it fits in well in my timing and I'm usually free in the evening. And unemployment claims on Thursday. So Wednesday, Thursday will be the main days that we're going to look to trade. Tuesday I may miss out just because it's actually, no, to be honest, I feel like Tuesday we can look to trade just because this event is in the evening, so we still got a decent amount of time in between retail sales and Wednesday. So I think it should be all right week. I think no news Monday might just be a slow day. It could be accumulation for Tuesday. So this is where I use economic calendar. It really guides how we're supposed to sort of trade for the week. So just keep an eye on that and always look at the economic calendar, because if you have like a big day, if I go to last week and we look at CPI and Friday were the main days to trade last week. Now the price action was absolutely poor because yes, a lot of the time when there is CPI in the week, we anticipate, and big traders and the professional traders, you could say, wait for this CPI result to then trade off, which is why Monday, Tuesday, Wednesday was just awful in terms of price action. So that's when we really went in and aggressive, the moves really happened on Thursday, Friday, where price basically gravitated towards that prior monthly high. That was especially on NASDAQ, but I'm not too sure on gold or what happened there. But I feel like with the interest rate and whatever's going on with Powell, and this is a very big anticipated event. So we're going to see exactly what happens on Wednesday, which is why gold should be struggling as well. So it's understandable when you start seeing price action that's a bit slow, but don't worry, I believe that the price action should start clearing up. So if we switch back over to gold, let's start off with gold for a minute. I'm going to use my similar sort of concept, exact same stuff I use to analyze NQ. I'm going to just use it on here because it seems to work. It works across across the board, and we're just going to go straight into it. So to start off the week, what I do is I mark up the prior weekly high and prior weekly low, because this is what this current week will refer back to, whether it's going to grind towards the prior weekly high or fall back down to the prior weekly low. So now that we've got that in play, you can see that we have prior weekly high and lows. You can see I've got these blue boxes. Now this blue box here is basically wrapping around this bulk of fair value gaps. So you can see that we got fair value gap, fair value gap, fair value gap. Rather than drawing three separate little boxes, I just wrap them all into one and notice that this is a point of interest. Notice how price is not delivered back down here. So this could be a potential where price could fall back down. However, what happened on Thursday with CPI is price actually broke back above this inefficiency here, which you can see this is a SIBI. It respected as resistance here. When price broke above, we used it as support. When we broke below, we used it as resistance. When we broke, we used it as resistance here, here, here. And now we're using it as support. So this is a key level to mark on your charts. I'd agree that this is a very key level to mark on your charts. So as long as price stays above here, then I'd anticipate price to navigate towards the prior weekly high. Why? Because if this is the low right here and price just continues to climb up before FOMC or maybe with FOMC, this whole setup is a market maker buy model, because you could see that you have the left side of the curve, albeit the price did not really push into like a point of interest. Maybe we had something on the 4 hour. Let's have a look. Yeah, you could say that price pushed into this 4 hour fair value gap here and respected this, which is why price is pushing up. So as long as price stays above this blue box here, I'd anticipate price to continue its push up, and you can look for buy setups within this to start attacking highs and keep going. If, however, price closes below this blue box, this will then become a bearish PD array where I anticipate price to fall back down to here. And then depending on what happens here, whether price wants to take out the low and reject back inside, then you're likely to get something like this where price pushes back up. So I think it's step-by-step sort of basis. I'd recommend using this box here. If you don't understand what I mean by inverting and stuff, please look at inversions of fair value gaps and stuff, because I only look at the 1 hour time frame and I see if price closes above it or below. So if price starts to close below this box, I'd anticipate the lows start to get hunted and back into this range. If this gets closed below, then we keep going lower. Unless, you know, price respects this as support, then you're likely to see price push back up. But for now, we're using this, let's keep it nice and simple. We're using this as a range. I like how that is a blue box. Let's change that to something like that. So that's the range where I'll be looking for price to continue pushing back up to the prior weekly high. I'd keep pushing bullish if these levels are being supported. Just keep buying this thing because you don't know where it's going to stop. We've got 3,700, which is a key level to mark up on your charts. So keep an eye on that. And that could be a main thing where we get to for FOMC. Now, one thing I want to let you know is keep an eye out on what the days do. Whether Monday is bullish, you could get a Tuesday bullish, you could get a Wednesday bullish, and price has already taken out a key levels of liquidity. If this occurs on the weekly profile, you could then anticipate a bearish rest of the week back down into these ranges, right? But you need confirmation that price is obviously, you know, breaking down, whether that is in the form of a breaker block where price just does something like this and pushes back down. But keep an eye out for Monday, Tuesday, Wednesday. Try to look at what price does. Whether has it been very bullish? If it's been very bullish, I'd stay away from buying really high unless it's a clear setup. This is how you really gauge what FOMC can provide. Because although, you know, although the numbers come out after, we can't anticipate what numbers come out from the press conferences and these news releases. However, we can anticipate what price action will do based on the structure. Because yes, interest rates could be really high, but then gold basically just falls. You know, interest rates could just go up and then gold just absolutely falls. And then you're questioning why has that happened? But that's just because of the structure, that the market will do what it needs to do. The algorithm will do what it needs to do first, then it can react to the news. And that's why you get these whiplash movements, because it just goes and fills and then comes back down, manipulates and does all whatever. So that's for that. And I think that's enough for gold. And we can go and switch over to NQ. So that's pretty much it. So as long as we stay above this, we gravitate towards the prior weekly high. Let's move over to NQ. Here we go. Right, NQ, I believe it's a bit more simple for NQ for now. If we start off on the higher time frame in terms of weeklies, you can see we have the prior weekly high mark and prior weekly low would be down here. So if I bring that there, you'll see that that would be the PWL. Now, in terms of this markup right here, I believe that NQ could still keep climbing just because of the fact that there is no SMT, is the first point, no SMT. So there's no indication that there could be a swing high forming and price could absolutely start collapsing with FOMC. Price is correlating with all the other pairs. Order flow is still bullish at the moment. There's nothing indicating that price is about to turn around because we still just keep climbing. So all we just need to do is just follow the trend. Just keep buying this thing on any pullback, look for retracements and then trade the expansion as I explained in my higher time frame protocol video. But this is the key area I'll be watching. Why? Because this is a time-based liquidity fair value gap which broke the prior monthly high. So if price stays above this, I'll still anticipate bullish prices. So if price pushes back down and doesn't close below this, I'd anticipate price to create a market maker model, whether to continue back up, you know, so you can look at that as your point of interest. Look at that, how it's within the prior monthly high. So this could be a key support zone. Now, if price closes back below this level, right, and uses it as resistance, then we start attacking the lows. It's simple as that. And that's your indication that price is, that price is about to start turning around and start attacking the lows. But the thing that can help that is if you have some sort of SMT, you know, on the against NQ, so on the higher time frames or something, whether you see that, okay, so this failed to take out the prior weekly high, however ES did, that means that the prior weekly high is now protected because ES has already taken it. So this does not need to take out the prior weekly high. It can then continue its way lower. So if you get something like that, this will be your good setup to anticipate a reversal. However, for now, we just keep sort of looking for buys right here, and then who knows, you can get some bullish SMT to aid that setup right there. So I'm going to keep it nice and simple. That's why I decided to do two sort of analysis on gold and NQ. So we just keep it like that. I think we can just end that there. So it's been OASFX. Peace out.